Welcome to this week's edition of Your Financial Compass, the show that's dedicated to helping you successfully navigate to and through your retirement. I'm your host, Kristen Oakley, and I'm joined today by two members from Bullman Wealth Group. We have Chris Bullman, who is the founder and financial advisor, and financial advisor Scott Vallon. Chris, Scott, my friends, it's great to be back with you. How are you?
Fantastic.
Great, and before the show we were talking how Taylor Swift is going to release a movie of her concert. You got to go to the concert. My daughter, who's 9, didn't, but her and my wife already bought tickets.
I'm excited for them. They're going to have the best time.
Oh yeah,
it was
and Chris
quite the
said
show.
he would probably go.
And Chris was like,
my
nope.
4 sons and I are excited to go.
That's awesome.
Yes.
Well, it's always a good time with you all. We like to have a lot of fun on this show, but most importantly, this show is dedicated to you, the viewer, to help you successfully navigate to and through retirement. You know, the reality is a lot of folks have spent so much time focusing on their accumulation years. You've been working hard, putting money away, saving, but that day comes when you're either nearing or entering retirement where there's an important shift that needs to happen, and a lot of times there are some common pitfalls that all three of us have seen. I think between all three of us, we've said we've spent how many years in the industry?
Nearly 50.
Nearly,
yeah,
which is
years to be exact.
which is wild. So lots of experience between the three of us, and there's several common pitfalls that we see folks make when it comes to retirement planning, and we want to make sure that you avoid falling into those same pitfalls. So that's what we're going to be talking about on today's show. So Scott, let's just start with you. What's one of the most common issues that you see people facing, one of these common pitfalls?
Yeah, definitely one that we see a lot is when someone comes in, say for a meeting, and they have a portfolio of investments and they want us to review them and say they're maybe a few years from retirement, or maybe retiring in a few years, or have been retired for a few years. Mm-hmm. In their portfolio, how they're invested is just too aggressive for their setup. Mm-hmm. And you know, people get busy with life and they just get used to saving the money, but they don't realize they never kind of changed it from how it was set up maybe 10, 15, 20 years ago. And then it's like, oh my gosh, I have the portfolio designed for someone much younger. Mm-hmm. So just getting that right balance, is it appropriate for your stage of life? Obviously, I'm 43. My risk strategy will be a lot different than someone who's 63, 65, 70. So we definitely see that a lot.
Yeah, I mean, there's portfolios can be too aggressive where you might make 30%, 25% one year, but does that really help you if the next year you lose 30 or 40%? We talked on a previous show of markets can fluctuate so much, especially if you're invested all in aggressive type portfolio or even a growth portfolio. You can, 13, 15 times over the past 80 years, the market's dropped, between 30 and 45%. So you don't want that when you're in retirement. We always say if you think of a tape measure and you pull it all the way out to 85 or 95, that's your lifespan.
Yes. But
now if you're 60, 65, this is what we have left. So when we talk about being able to recover and you have a whole life and the market's average 10% or 8% or 11, whatever number you want to use, that's over this time period. This is your time period, and you're pulling income.
Yes.
So if you come in with a portfolio, or if you have a portfolio that has too much risk, that can cause major problems, especially if you're in that final phase of income and if you're taking income from the portfolio. And by the same token, some people have portfolios that are too conservative.
Right, they're not taking enough risk.
They're not taking any risk.
Conversely, the problem, right?
And yes. And we've seen interest rates rise recently, so finally they're able to get some type of return in their accounts. But for years, sometimes 20 or 30 years, they have hundreds of thousands or millions of dollars sitting in a checking or savings account because they don't want to take any risk. And I think that can also be a detriment to your future and your retirement, because there are investments where you can still make gains and good gains without taking the risk that might be inherent in the stock market.
Right.
And that's why it's important to talk to someone who knows those things.
Right.
Absolutely. Well, and it's really coming down to understanding how your portfolio is actually allocated. And it's not shocking because I see it all the time, but I think a lot of folks just have no clue how their portfolio is currently being allocated, especially if your money's been in a workplace retirement plan. Often, we don't think about it. It's on autopilot. You've just been putting that money in, but you really have to look at what it's actually invested in.
Yeah, and you beat me to it. I was going to say, we use the phrase a lot, allocation. How's my investment allocated? What allocation means, as Kristen was just referencing, is what investments do I have? Is it this fund, this stock, all these different things? So that's what we mean by allocation. But one of the things that we do when we sit down and talk with someone in that first meeting especially is, we get a feel for them, have a conversation. Then between that first and second meeting, we have them take a risk test. And it'll ask a series of questions in different scenarios, and it'll give you a risk number from 1 to 99. And it's funny now. It wasn't funny then when it happened, but last summer I met with a woman. She's like, I've been retired. I'm super conservative, Scott, and my portfolio mirrors that. So she took the test. She scored a 35, which means you're relatively low. You don't want to take much risk.
On the risk scale. Think
On
of
the risk-
miles per hour, right?
Yes.
Like
Right.
35 miles per hour.
She was 35 out of 100.
Right.
Well, we did a risk test of her portfolio, the way she was set up, and she swore up and down that she was conservative. Her portfolio was an 85.
Wow.
And she's like, oh my gosh, I had no idea. And she was very, very upset. And it's like, well, hey, at least we know now. Now we can start to make tweaks, but it's always important to see, is it lining up? Is your risk preference matched by how your portfolio is set up in terms of risk flavor or profile? And, that's always one of the things that we're doing when we, have these shows and we talk to folks. And, if this is something that's been on your mind and you want to find out, more about your risk setup, I would say, call the number. We can schedule a time. We can do a complimentary financial compass review. Part of that review is what I just mentioned, is a risk analysis. We can find out your risk number and then find out the risk number of your portfolio, amongst the other things that we do. But it's definitely one of the things that stands out in the other steps of the financial compass. But that's, when you schedule time to have that conversation, that's one of the things that we're going to talk about. We can see, are you in alignment? If you're not, wouldn't you rather find out now? So that's one of the things that we can offer is if you schedule time to talk, we'll have that analysis and we'll match it up and see if you're in alignment with your current investments.
Absolutely. Well, one more question I just want to throw at you guys, and I know we didn't talk about this ahead of time, but I'm so curious to hear your answer. This concept of rebalancing a portfolio, I think, that is a term that gets used, and there's different ways to go about rebalancing. Talk a little bit about how you all handle that at Bowman Wealth, because I think that's an important distinction.
Yeah, rebalancing is sometimes different areas of your portfolio are going to excel, and sometimes other areas sort of fall back.
Right.
And sometimes when those areas excel, that doesn't happen every year, right? So if you have a portion of your portfolio is in growth, or a portion of your portfolio is in large cap or mid cap or international, and that has surged ahead, sometimes what happens is it's like a grocery store line. As soon as you get to the line that's surging, all of a sudden it's like, I want to write a check or check the coupons, and that line slows down.
Or TSA pre-check.
Yes,
I always pick
all
the
the
wrong
time.
one, right?
Yes. So I digress. So, it's the same thing with a portfolio. Just because it's your best performer one year, it could be the worst performer the next year.
Absolutely.
So we want to lock those gains in and reallocate to the proper positioning that we should be in, because maybe another position had fallen back.
Right.
We can reposition those gains into something that's now on sale.
Yes.
And reallocate, and now we're in a better position moving forward.
And that's how you buy low, sell high. I think folks don't realize it, but that is the secret, is that rebalancing process.
Yeah.
And so in terms of frequency, I know someone who recently had an option. They were enrolling in their new workplace retirement plan. It actually gave them the option. Do you want to rebalance your portfolio once a year, twice a year, quarterly, or every month? How would you help someone navigate that decision?
That's quarterly at most. And if you're invested in individual stocks, you should be watching what they're doing. And we're paying attention to that with individual stocks. But you don't want to be just, again, the grocery store line. You don't want to just be following the trend. A good example is, Amazon, Apple, Facebook, Tesla.
Right.
If you would have sold at the bottom, you just missed 50, 70, 100% returns this year,
Yes.
depending on the stock that it's in. And so you want to make sure that you're not jumping, you're not have an itchy trigger finger with respect to your stocks and your portfolio holdings, and that you have a plan in advance. And we never are looking every day we're not day traders.
Right.
And we think that most investors should not be day traders. If that's what you love to do, then good luck. Some people do really well, and a lot of people lose all their money. So, but we think quarterly at worst, and annually, or quarterly at best, and annually at worst. So.
Got it. Well, good. Well, all such great information. I know you are offering your financial compass review for folks, and so if you don't mind presenting again, what's going to happen when people call the number today?
Yeah, so like I said just a couple minutes ago, part of what we're going to do when you schedule a time to have your financial compass review, it's complimentary, there's no obligations. Chris and I always say we get a chance to meet and we end up working together, that's great. Maybe we meet and we don't end up working together, we can always assure you're going to learn something and there'll be some kind of value gained. And like we mentioned a second ago, part of it's going to be that risk analysis. that's something you want to review on amongst the other steps of the financial compass, then schedule a time and let's have a conversation.
Wonderful. Scott, Chris, thank you so much. To our viewers at home, that number to call to get your financial compass review is there on the bottom of your screen, 888-970-4685. You're also welcome to take out your smartphone, and you can simply scan that QR code down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Bowman Wealth Group will reach out to you to schedule your complimentary review that way as well. When we come back, we're going to address some more common pitfalls in retirement planning. Stay with us.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Your Financial Compass, brought to you by the team of Bowman Wealth Group. I'm your host, Kristen Oakley, and I'm joined by Chris Bowman and Scott Vallon. We are talking today about some of the common pitfalls that we see folks making when it comes to retirement planning so that you can make sure you avoid falling into those same common issues and problems. And we talked earlier in the first segment about the importance of making sure that your portfolio is balanced properly, right? That you're not taking on too much risk. Conversely, that you're maybe not taking on enough risk, and you need to address that. What are some of the other common pitfalls that you see folks falling into?
Another one that we see a lot is a lack of planning. And there's an AARP study that we saw a few years ago, and it said the average person spends more time planning for their vacations and their working years than they spend planning for their retirement. And let's be honest, one is a lot more fun. But, when the rubber meets the road, we could argue if you do plan, then you can enjoy longer vacations in retirement.
Then the longest vacation of your life, so to speak, can be a lot more fun, right?
And I think part of that is just the intimidation factor of the uncertainty of it.
For sure.
Of like, oh gosh, I don't know where to begin. What does that mean? When do I retire? How long will I have money or not? And people just avoid it, like a bunch of dirty dishes in the sink, and you just let them stack up. So definitely a lack of planning is one that we see, and that's obviously an area that we can help because, surprise, surprise, we're financial planners.
That's what you do day in and day out.
That's right.
Yep. Well, so this lack of planning, I think, to your point, it can be very overwhelming. A lot of folks don't know where to start. And a lot of folks just don't even have a plan. So how much do you find when people come in to meet with you for the first time, what percentage of folks actually do have some sort of plan already in place?
Wow, I would say it's probably less than 5%, honestly.
So you're not alone, right? If you're like, that's me, you're not alone.
Yeah, I'm looking at you. You're not alone. It is literally a small percentage of people that come in with a written or printed financial plan that they can look back on. And the genius of the financial plan is we can actually, every time clients come back in for a review, we're able to pull up right where we left off. What's the plan that we have in place? How up to date is it? What are the numbers now based on what where we thought we would be, and update everything, and then continue to move on. Because a plan is only accurate the day you do it, and then the next day things change because the markets change, and sometimes for the better, sometimes for the worse. So some of the things that get out of whack in a financial plan can be spending, spending more than you had budgeted, more than you had thought. One of the important things to think about as you're preparing for retirement or in retirement, especially preparing for retirement, is you think you're going to spend so much money and have a certain budget. And then once you get into retirement, really two big things happen. One, you start to understand how you really are going to spend. Now that you're not going to work every day, you got more free time, you have more free time, you might be shopping on your iPhone or your
so easy to do these days,
boy,
right?
It can be trouble. Or maybe you learn that you'd like to travel and you do more of that, or maybe you're spending more money on the grandchildren, or you're taking them more often, which means taking them out and spending more money. Or so different things happen like that with respect to retirement planning. Maybe you also understand or begin to understand that you don't like to do some of the things that you thought you were going to do, right? And the other, I mentioned there's two big things that we notice a lot. One is your risk tolerance might change. We've had, I can think of a specific client, I think the net worth maybe around $7 million, but several properties, rental properties, and also there's probably $4 million in assets with us. And when they retired, they thought that they were okay with a certain amount of pullback in the market, maybe like 10%. Well, when the market dropped 10% on a $4 million portfolio, maybe they were down 5 or 8. Now they see those numbers and they're not comfortable with that. And they say, hey, Chris, what can we do? We're not as comfortable as we thought we would be.
Right.
Let's shore it up and let's make it a little bit safer. And by the same token, some people might be really safe. And then as the market's fluctuating, they realize, well, we're not spending as much money as we thought. We don't need this money. We want it to grow for our kids. And actually, we want to take a little more risk because we want this to be based on our kids' inheritance. And they've got a long lifespan, so we want it to grow for them.
Right.
Lots of different things happen. Once you get that final paycheck, we talk about this a lot. You're on your own, you're in retirement, and you're living off of your wealth or you're living off of your income streams. And lots of different things start to happen. And I think that's really where we excel in helping people, is because we do these plans every day. And we can give you some of those tips in advance of things that maybe you haven't thought of.
Absolutely.
And another thing, Chris referenced spending. And, we don't see a lot of people that have written plans. But when we do meet people that have written plans, say someone's been retired for a few years, I guarantee that their take on their spending changed last year in 2022 when, I always say at the seminars, the dreaded I word popped out, and it's not the IRS, which is another dreaded I word, was inflation.
The hidden tax.
Yeah,
we
when
like to call
I love
it,
coffee,
right?
coffee was 27% higher last year. But beyond that, those people that were retired, and maybe they've been retired for years, their eyebrow raised last year when the cost of groceries and all these things shot up. And we've always factored in inflation planning into a plan. Thankfully, it won't always be as high as it is now, but it's become so much more of a common knowledge thing. Like when my mom reaches out and says, Scotty, inflation, then it's a household thing, because those words had never left her mouth before last year. So it's understanding that, as Chris referenced a second ago, the plan has to adjust. And if, say we did a plan a few years ago and are updating it, and then inflation hits, wow, we certainly need to adjust because that vacation you were going to take that used to cost $8,000 now costs 10. So it's working that into the plan, and those kind of what do you call them? Extra hurdles that hop into the way.
For sure. To your point with inflation, all of us were really lulled to sleep for quite some time because the long-term historical average has been about 3% per year. But man, we all felt that squeeze last year, for sure.
We did. And speaking of moms, my own mom who has a plan in place, my mom and dad, but sometimes she'll say to me, Chris, what's the point of having all this money if you're not going to let us go spend it? I'm like, Mom, we've got 25, 30 more years that we need to make your money last. Even my own mom, I have to remind her, we've got a long runway with this money. We can't just go spend it because you have it.
Absolutely. Well, and that brings me to the next pitfall that I know all three of us are very passionate about, because one of the most common expenses that a lot of folks don't necessarily take into consideration or plan for, the number one risk that we could maybe argue to someone's retirement plan, is healthcare and the cost of healthcare and long-term care. So let's touch on that a little bit.
Yeah, so healthcare, certainly one of the things we've talked before in prior shows about the 5 kind of pillars of the financial compass, and healthcare is one of them. And, it's always a concern, it's always a fear, but sometimes we put it off until it smacks us in the face for that unexpected expense. And you have to expect, unfortunately, that those kind of things are going to pop up. Chris and I have dealt with it personally, but and several of our clients, obviously. So it's having a plan in place, again, can kind of put us out ahead of that danger. Just knowing, hopefully nothing like that ever happens, but if it did, having certain maybe accounts set up to cover it, or making sure there's long-term care, all these different things. So, the healthcare is always going to be such a kind of a thunder, rain cloud hanging out there.
Right. What are some of the average costs? Because of course it depends where you are in the country, but we're here in California, and I know that some of the costs can be absolutely astronomical. So how do you help people budget for, let's say, the annual cost of a nursing home, things of that nature?
Yeah, I mean, that goes back into just the overall plan. We have sort of a list of all the things that we want to plan for, and some people really want to plan for those things because usually they have a parent, a mother, father, maybe both, that have been put in a situation maybe where they're in a long-term care situation. There's an expense to that, and you either pay for it because you've saved for it and planned for it, or you get put in a different facility that you're not paying as much for and you really don't want to be there.
It's not the kind of care you really
Yeah,
want.
so it's one of those things we discuss, and we discuss the cost. And you know, the statistic is like 65 or 70% of people in California will need some sort of a long-term care situation in their lifetime, and less than 7% of people have planned for it.
Wow, and that's staggering. So what is the current average cost in California?
It's a lot. It's
Change
over
by the dates.
$7,000 to
Right?
$20,000 a month, depending on the level of care you need.
Yeah, and that's one of the highest in the nation for sure.
Yeah.
Oh, easily.
So you guys definitely have to plan for that.
Yeah, and if these, you know, obviously we all have these concerns, and as we said it before, one of the things you can do is schedule a time. Let's have a conversation if that is your concern, or something else that we talked about in terms of income planning. We can have this talk and do your complementary financial compass review to see if there's you're out of line in risk analysis. You haven't planned for unforeseen medical expenses. These, amongst other things, are things that we'll talk about and see if its value can provide to you.
Wonderful. Scott, Chris, thank you so much. To our viewers at home, we don't want you to be stressed about these things. The key is to be proactive and pick up that phone, call that number on the bottom of your screen to get your own complimentary financial compass review. 888-970-4685, or scan that QR code and that will get you connected as well. We have some more pitfalls to cover today. Stay with us.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life, and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Your Financial Compass. I'm your host, Kristen Oakley, here with Scott and Chris from Bowman Wealth Group, and we are talking today about common pitfalls in retirement planning and how you can make sure you avoid falling into those pitfalls. So, Scott, what's another one that you see people often running
this
into?
This one really grinds our gears. Listening to the wrong people. Who's giving you advice? I am not a doctor. I don't give health advice. If I did, a lot of people would be sick and hurting. So I leave that to the experts. You know, we think back to the Thanksgiving table in 2021 when your nephew ran in. You need to buy crypto and Bitcoin and blah blah blah. Time out. You know, it's like when the woman at the water cooler is giving you advice and she's in debt or made poor financial decisions. Is she really the person you want to talk to? So I mean, that's what we do for a living. We can answer questions about that. So consider the source. And another thing is dealing in absolutes. The sky is falling. This is the only way to go. Annuities are terrible, or everyone needs an annuity. There's so much advice when it's all veered in one direction. Pump the brakes, because I'm a Star Wars fan. The bad guys are called the Sith. Said only Sith deal in absolutes.
Right.
We don't deal in absolutes. And in advice, Chris gave me advice on what to wear today, so that worked out.
Well, and that's just true. I mean, it's true so much with financial planning that the answer actually is it depends, because it depends on your individual financial situation. And this is why often we need that independent, objective third party to come in and say, hey, objectively, this is what's best for you, but it might not be necessarily best for the person sitting next to you.
Yeah, that's absolutely true. And I was in a restaurant the other night. There was a group of financial people there, and one guy just started telling me immediately, you should have all your clients doing this, this, and this. He didn't know me or my practice or our clients at all. And the things he was saying was, I mean, it was so off base. It was actually comical that he would just start offering his opinions. Not like it would be like a heart surgeon walking in and to a knee doctor's office and going, you should have all your, heart patients doing this, and you should pump them full of these heart drugs. And it's like, wait a second, I'm a knee doctor.
Yeah,
So,
exactly.
people
Yeah.
just
Yep.
can give bad advice. And I would say that I want to touch on the biggest thing that generally people take away from the financial planning process. And it's for the first time seeing all of those things in one place together. And sometimes spreadsheets are boring, but when it comes to life is when you see all of your income streams, your taxation, the volatility in the market, expenses, your budget, your mortgage. How are all of these things going to play together? And it's important to understand too, plan with the end in mind. There's no prize for dying with the most money. You can't take it with you.
Right.
So let's plan for, everyone has different goals. Some people want to spend, Scott was saying earlier, some people say, I want my last check to bounce. And other people say, we don't like to spend money. We want all the money to go to our kids.
Right.
And then there's everywhere in between. And so it's important when you see all of that together,
Yes.
and you go, wow, I'm going to die with $30 million or 20 or 8 or whatever it is, or
Right.
holy moly, I'm going to run out of money when I'm 77. Either way that goes, you want to know as soon as possible so that you can take action to hit what you actually want to have happen.
Well, and going back to what you even shared when your own family, right? When your mom's like, Chris, I want to spend this money. Then you have to walk the tightrope of,
Yeah.
yes, we want you to be able to have the retirement you want to have and do the things you want to do, but you also have to make sure that that money is going to last. There's so many
yes.
variables.
You
that-
don't want to outlive your money. That's
Right.
that's the a main theme that we see all the time is one of the main fears is I want to make sure that I don't outlive my money. I don't
Yes.
outlive that last paycheck.
Right, for sure. Well, gosh, we've covered a lot today. I know this time always goes by so quickly with you all. We only have about a minute left in the show, but I think, the key is getting a solid financial education and working with someone who does this day in, day out, which is what you all do.
Yeah, as we said earlier, consider the source. This is what we do for a living. We don't give medical advice, thankfully, or fashion advice. If, maybe you feel like your risk is too high in your portfolio, maybe you feel like you're not sure where the income's coming from, maybe you feel like you haven't set aside money for health care and you feel like that could be a concern or something you want to talk about. These and many other things that are what we do. And we have this, you have the opportunity, schedule a time to do your complimentary, no obligation financial compass review. We can talk about that and any other number of concerns you might have. We've heard every question you can ever think to ask, so don't be afraid to ask them.
Wonderful. Scott, Chris, thank you so much. To our viewers at home, thanks so much for watching. 888-970-4685 is the number to call. We look forward to being back with you next time. Thanks for joining us.